Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly demand and support area. From here, in fact, multiple rejections to the upside have been created. Every single time that the market tested this zone, it got rejected to the upside quite aggressively. And what we can see is that at the moment the market is testing the exact same zone, has already started rejecting it to the upside. So in a situation like this, more bullish price action could be expected away from this area, as already happened in the past every time that the market tested this exact same zone. So the monthly time frame does seem quite bullish with a rejection of historical support. Let's drop down on the weekly time frame and see what we have. Now, from a weekly standpoint, the price action and pattern that the market has been created is a quite textbook pattern price action. In fact, what we had here was the creation of this W formation. And as I explained many times, after the creation of a W, what you would expect is first the completion of the W formation at the neckline and then the continuation to the upside with the rejection away from the previous resistance turn support. And that is in fact exactly what the market just did. First completing the W formation at the neckline and then starting to reject it to the upside. So from a monthly standpoint, everything has been going exactly as you would usually expect in a situation like this, following a quite standard price action and pattern. Now, if we look closer, we can also notice that from a structure perspective, the market is rejecting a confluence of support zone because this is previous weekly resistance turn support. And also, since we have an impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And this will show us how we have a 50% and 0.618 Fibonacci retracement zone, which is aligning up perfectly with the previous resistance turn support, therefore creating a confluence of support because we have multiple layers of support lining up in the same area of price. And when you have a confluence of support zone, you have an increased probability of getting institutional longing. And we will be speaking about institutional longing in just a few minutes when we move to the commitment of traders. So when we have institutional longing, that increases the probabilities of a rejection to the upside. So let's keep in mind that the monthly is rejecting historical support. The weekly is rejecting a confluence of support, which is an area inside of which there is a good probability that institutions have started longing this pair. Dropping down on the daily time frame, what do we see? Now here in the daily, we can see a massive impulse to the upside. Now, after an impulse, what we could expect is first a correction and then the continuation to the upside. Now, again, if we want to measure this correction, we have to take our Fibonacci from the low to the high of the impulse leg, which shows us how we have a 0.32 Fibonacci retracement lining up around this area, which is also previous resistance turn support from which this push to the downside started. So if the market here will correct to this support zone, there is an increased probability of getting even more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this area. Now, why am I saying increased probability of seeing institutional longing? Because already we're seeing institutional longing. In fact, if we look at the commitment of traders precisely on the GBP, the first thing that we have to keep in mind is that if we're looking at the GBP, we are already looking at the GBP USD because all currencies on the spot are traded against the USD. And with the last reports, we went from having minus 28.9k net positions all the way up to a positive net positioning of 44k net positions, showing how institutions went from having more shorts than longs with 72.6k shorts compared to only 43.6k longs, all the way up to now having a positive net positioning of 44k net positions, so more longs than shorts, 102.5k longs compared to only 58.4k shorts. So institutions are moving to the bullish side of the GBP, therefore GBPUSD making it stronger. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. So here from a daily perspective, if the market will correct to this area, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes. So 4-hour and lower. Therefore, what I would expect in a situation like this is that if the market goes for a retest of this area and the market shifts from an intraday bearish to bullish market inside of this zone and we continue to see institutional longing, I definitely wouldn't be surprised to see a potential rejection to the upside away from this confluence of support zone, further rejecting to the upside that historical support and demand area that we have identified at the beginning of the video when looking at the monthly time frame. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.